Hello, astute investors and curious minds. Welcome back to the channel where we demystify the complex world of short squeezes and how to borrow stocks. Today, we're diving deep into a fascinating microcap company that's showing up on our screeners due to some truly eye-watering borrow fees, NCT Limited, trading under the ticker NCT. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into NCT Limited. This company operates in the industrial sector, specifically marine shipping, providing crucial maritime shipping services in Hong Kong and internationally. Through its subsidiaries, NCT offers time charter and vessel management services worldwide, and they even dabble in the processing of pulp, paper, and paperboard products. As a microcap company, NCT has a relatively small market capitalization, which often means its stock can be more volatile and reactive to supply and demand dynamics. Show company logo/stock chart. What is cost to borrow and why it matters? Now, let's talk about the metric that brought NCT to our attention, its cost to borrow, or CTB. For those new to this, when you short a stock, you're borrowing shares from a broker to sell them, hoping to buy them back later at a lower price for a profit. But borrowing isn't free. You pay a fee expressed as an annualized percentage. Think of it like interest on a loan. A high cost to borrow means there's intense demand to short a stock but a very limited supply of shares available to borrow. Highlight CTB rate for NCT. The current annualized cost to borrow fee is an astonishing 677.5%. This isn't a typo, it's over 600%. To put that in perspective, many stocks can be shorted for fees well under 1% or 2% per year. When you see a number like 677.5%, it's screaming scarcity and significant conviction from both sides of the trade. Why this stock is hard to borrow right now. So, why is NCT so hard to borrow with such a sky-high fee? Our screener flagged it primarily because of this exorbitant CTB. While we don't have CTB momentum data or the exact number of shares currently available to borrow, the 677.5% fee alone tells us that borrowable shares are incredibly scarce. What exacerbates this for NCT is its extremely small estimated float of only 0.3 million shares. The float refers to the number of shares actively trading in the public market. With such a tiny float, even a modest amount of shorting activity can quickly exhaust the supply of available shares, driving the cost to borrow through the roof. Our internal composite squeeze score for NCT currently sits at 42.5 out of 100, reflecting this high CTB and low float, the significant factors. Squeeze mechanics explained. Here's how this plays into short squeeze mechanics. When a stock like NCT becomes hard to borrow with such high fees, short sellers are paying a premium every single day to maintain their positions. If the stock price starts to rise, these short sellers face a double whammy. Their position is losing money, and their borrowing costs are eating into any potential profit, or accelerating their losses. If the stock continues to climb, especially with a low float, panic can set in. Short sellers are then forced to cover their positions by buying back shares in the open market, regardless of the price, to stop the bleeding and avoid escalating borrower fees. This mandatory buying creates demand, which pushes the stock price even higher, trapping more shorts and potentially triggering a cascading effect known as a short squeeze. Short illustration of short squeeze, however, it's critically important to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the company's fundamentals are weak, and they are willing to pay those high fees to bet against it. Dilution risk check. One crucial factor that can completely negate a short squeeze thesis, even with high borrow fees, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide liquidity for short sellers to cover their positions, alleviate borrower scarcity, and depress the stock price. It's like adding water to a concentrated juice that weakens a punch. Our check for NCT showed no recent dilutive SEC filings -1/-3/424B in the last 90 days, which is a positive sign for any potential squeeze scenario. Additionally, we found no recent reverse split for NCT in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching with NCT? Let's look at recent price action and volume. Today, NCT is up a modest plus 2.7%. Over the last 5 days, it's seen a plus 1.47% increase, and looking at the last 30 days, NCT has climbed by an impressive plus 18.15%. Should price chart this upward trend, while not explosive, could be putting pressure on short positions. In terms of volume, today's volume is 384,574 shares, which is relatively low compared to its 30-day average volume of 628,349 shares, giving it a relative volume of just 0.6 average. Low relative volume on an upward trend with high CTB could mean that buying demand is present but not yet overwhelming, or it could also indicate lack of broad interest. Sustained higher volume accompanying price increases would be a key indicator of increasing pressure on short sellers. Intercont Cayman Limited, NCT, presents an intriguing case study with its exceptionally high 677.5% cost to borrow and tiny 0.3 million share float. These are certainly characteristics that grab the attention of anyone looking for potential short squeeze setups. While the current upward price momentum is positive, remember that high CTB alone doesn't guarantee a squeeze, and comprehensive research is always paramount. Keep an eye on NCT daily borrow rates, available shares to borrow if you can find the data, and any significant shifts in trading volume. If you found this deep dive into NCT helpful, please hit that like button, subscribe for more unique stock breakdowns, and let us know in the comments if there are other hard to borrow stocks you'd like us to analyze. We love hearing from you. Thanks for watching, and happy researching.